Jatin Damania, research analyst, Kotak Securities, joins in to understand the numbers that are slated to come out later today, which is essentially from the commodities basket. Jatin, good to have you on the show. Thanks very much for taking out the time. How do you look at the move in commodities, whether it's steel, aluminium, copper for that matter? How much do you think is this move sustainable? The stocks have been on a tear for the last almost 2 years, but do you think that there's more to go in this multi-year bull market?
If you look at the metal sector as a overall, we as a group, we still believe that there is lots of steam still left in the sector as a whole. And 2019 being an election year, we would see some amount of the infrastructure activity to pick up a higher pace. And if you look at in the past, we have not seen any significant capex coming on from the private sector. It's only the PSUs and the government who are focusing more on the capex cycle. So with the revival in the capex cycle from the private and the extra capex spending from the government side will definitely help the metal sector as a whole on the demand front. And definitely on the pricing, we have seen the prices have remained strong, and probably we are of the belief that there can be some amount of the cool off that come on the metal steel on the steel prices, but on the non-ferrous we expect the price of the aluminum and zinc continue to remain strong.
So how does that work in with the earnings that are expected? I mean, what are you pricing in on what Hindalco may report later today and what may come by from Tata Steel? Because both have been outperformers.
So yes, so if you look at it, there are three companies that are going to report the numbers today. One is Hindalco, Tata Steel and JSW. So if I look on compare non-ferrous and the ferrous, definitely the steel pack, which is Tata Steel and JSW, still likely to report a better earning as compared to Hindalco. So first, let's pick on the Hindalco. On the revenue front, we expect the company to report a revenue of almost around 106 billion as a group, which will be down 3% sequentially as well as in year-on-year. This is largely due to the hedge losses and the flattish volume, which will offset the improvement in the prices. If you look at the aluminum prices, compared to a previous year, the prices have gone up by 12 to 13% in the rupee terms. But however, because of the hedge losses, the revenue is likely to remain little muted. On the EBITDA front, Hindalco is likely to report an EBITDA of around 11 billion, which is excluding Utkal. So EBITDA is also will be down 12%. If you include Utkal, there can be a 5% sequential jump in EBITDA. So that's all on the Hindalco front. If you look at the Tata Steel, we expect Tata Steel to report a healthy, strong cuts of numbers on the domestic as well as on the consolidated basis. On the standalone front, we expect Tata Steel to report an EBITDA per ton of 16,900 rupees per ton, which is largely aided by the higher realization. However, the benefit of the sum will be partly offset by the higher raw material cost. And even in the Europe, we are expecting the spreads to improve for the current quarter, and expect the Europe EBITDA to be around $75 per ton in the current quarter from $40 which company reported in the last quarter.
Also wanted to understand, on a macro basis, how much of an overbearing factor do you think will the rise in input costs like coal, alumina, etc. be on the three metal companies this time? And do you expect then margins to see a bit of a contraction?
So definitely the uptick in the alumina prices that we have seen in the starting of this quarter, which is a Q1 of FY19, there can be some amount of the pressures facing on the aluminum smelters company, like because of the transfer pricing in case of Hindalco. But definitely we are bullish on the overall on a longer period of time on the aluminum per se as well, given the reduction in the supply from the China and the strong demand. So we believe that definitely in the coming quarters also, barring near term, there can be a margin compression on the aluminum smelter front. But over a medium to longer term, we expect the aluminum to perform much better as compared to alumina.
So at large, what is it that you'd be looking out for from the commentary of the managements of the three companies that report the numbers today, Tata Steel, Hindalco and JSW? And, Would you say that there are any key risks that metal companies at large could face in the fourth quarter numbers?
See, the commentary that I will be looking at will be on the future got commentary. Like for example, if I'm looking at the Tata Steel, definitely I look at the commentary on the recent acquisition that company made for the NCLT assets of Bhushan Steel. How the companies are going to pan out the ramp up, the capacity ramp up in the medium to longer term, and what will be how the companies are going to fund that acquisition. Secondly, what's the steps that companies are taking to improve the internal efficiency in the European front. However, if you look at the JSW Steel, definitely they are we will be looking at the next year guidance as companies almost operating at the rated capacity. So definitely volumes are likely to remain muted in the near term, but over the longer period of time, because of the capacity expansion, we can see a huge volume that can come in 2021. So the commentary on the future growth prospect and the margin will be the key things to watch out for.
It's been a 2-year strong rally that metals have seen. Would you say that the best is behind us, or do you think there is some more significant upside that the cyclicality of the sector could bring about, and we could see some more stock returns from the current levels too at large?
See, definitely as a house we are bullish on the sector, and we feel that there is some more steam left in the entire sector as we are seeing the demand picking up on the ground, and definitely at certain point of time the global factors are supporting the overall prices. So higher volume and the better pricing scenario in the medium to long term can help the sector as a whole, or the companies operating the sectors, to report a better earnings and can drive the valuations going ahead.
Now we leave it at that. Thanks very much for joining us with that perspective on the markets. Really appreciate your insights and your opinion.